Thanks everyone. It's great to see a packed room here. We've been doing this is our second year, but we've done other functions with Davidson as well. And I think a theme that you'll be seeing through some of the slides that I have is that we are emerging from the despair that we had a year and a half ago. It's still challenges ahead, but hopefully I have some good news for you as we go through this. Before we get too far into it, just wanted to say thanks to Bahar Squared, one to Arez for the invite, and one to Bahar for organizing everything. Please don't take anything I say today as investment advice. There's a fair bit of numbers. There are some companies mentioned in here, so please talk to your advisor before making any investments. I got quite a long agenda to get through today. Probably spend a bit more time up front on the market update, and then get moving a little quicker through some of the back end items. Yeah, with that, I'll just jump into it. So apologize for some of these numbers. They're potentially a little bit funny looking and or difficult to see, but as my kids tell me, well, Dad, you're kind of funny looking too, and I'm having difficulty seeing these days as well. So basically the box on the left talks about numbers of either listings or just companies and where they are geographically. The right side box is basically cash financings. So the top left circle there, dark blue area, the largest one, that's new listings. We have 220 new listings between TSX and TSX Venture Exchange. Of that dark blue, 77 were ETFs, so those were all on the TSX side. The green on the top left circle is mining new listings. There was 40 of them in 2016. Of that, 30 were on the Venture Exchange. Next bubble over, or the lighter blue, there was basically 24 new technology listings. 21 of those were on the TSX Venture Exchange. And actually life sciences was the next largest category with 19 across the board. And a large majority of those were actually on the Venture Exchange as well. To the right side, the middle one in top row middle, that's just a breakdown of the 220. The dark green or dark blue, no surprise, those are all Canadian-based new listings. Then there's basically 11 new listings from the US and 11 international. I'll get to the breakdown on that in a little bit. Bottom left corner, just showing that BC's, the green there, 984 BC issuers. About 800 plus are on the Venture, rest being TSX. The big blue area there is Ontario. This obviously includes TSX and Venture, so that's why there's the large number there. And then the breakdown in terms of international, the bottom right one, that just says that there's about 120 US listings with us, and the rest are scattered around the world. Next largest market actually is Asia. We have 32 in Asia-based entities, and then Europe with about 25. In terms of cash, Goldar cash and the financings, that's been missing from the market for a while. It's beginning of 2016 definitely was difficult. Things started to trickle through in March, got a lot better in April and May. August was the busiest August we've had in terms of financings, and it continued through the fall. So there was $62 billion raised in the public markets between Venture and TSX. Venture itself raised, companies that you guys drive, raised $4.4 billion. So it was really good to see, because that was an improvement of $1.1 billion year over year. Average financing size on Venture was about $2.8 million. And it's about $91 million on TSX. And in terms of the sectors, I was a little bit surprised just based on the doom and gloom that I've heard and seen out of Calgary, but utilities raised $15 billion. That was top right circle there, the dark blue. The next biggest chunk was $11 billion in oil and gas. And then mining was the $9.4 billion. And then towards the top, it looks pretty small on the pie chart there, but technology raised $1.7 billion, and life sciences was a little over $1 billion as well. So pretty good capital raises in those industries as well. In case you actually want free market data like this in these types of reports, it's actually in here. It's TSX. You just go to MIG, M-I-G. You can Google that, and you can get all. This is a monthly report that comes out, so it's a good one to have in your back pocket in case you're going to any cocktail parties and you need some random stats. So. So this one, I just I'm not going to go through all these numbers in here, but just wanted to point out that in terms of market value, market cap, the year-over-year growth The green is venture, red is TSX, blue's combined. But on the venture side of things, market cap's gone up 65%. It's gone from 23 billion up to 38 billion. So it's a huge, huge increase in market cap. The bottom, basically you can skip the numbers up top. Just look at that chart down below. That green line is the venture index since December year over year. It's up over 45%, and basically it's the entrepreneurial spirit of the people here in this room that survives the tough times and drives the good growth times. So I think it's a good sign for things going ahead, and I'm sure there's more room to go. As an accountant, and I'm sure a lot of you here are getting your PD, so we're all usually pretty good with numbers. So when you do start with a smaller base, small amount of growth does have a large percentage increase. So that did help with the 45% growth, but hopefully we're on track to have another successful year this year. So in terms of what's new on TSX and TSXV, I alluded to earlier, there's 8 new listings out of international markets. That was basically 3 new mining issuers from Australia and Argentina. And then there was 5 technology issuers. They came from Brazil, Ireland, Belgium, and 2 out of Israel. It's actually a decent pipe forming for technology deals coming out of Israel. That's something that we're monitoring. We actually had a roadshow over there as well that was highly successful and well received. So if you start seeing some more, if you're in the technology space, that's a decent pipeline coming there. In terms of the U.S. new listings, there was 7, 2 in the life sciences side and 5 in the technology side. There was 1 out of Washington State, 3 out of California, and 1 out of Arizona. In terms of new listings year over year, we're up. It went from 87 to 104. Predominantly on the venture side, that was due to an increase in the mining new listings. They picked up an extra 5 there. Technology side picked up an extra 6, and life sciences picked up an extra 4. On the TSX side of things, year over year, went from 107 to 117. Predominantly, that extra 10 was pretty much mining related type new listings. So what's getting financed? There's 3 sort of themes I wanted to point out here. So again, ventures in green, TSX is in red, and blue is combined. It breaks out IPOs versus prospectus offerings versus private placements. So for venture, prospectus offerings raised about 20%. Sorry, the capital raised on the venture was raised via prospectus 20% versus private placements. 80% of the capital raised was by private placement versus TSX. They raised 90% of their capital via prospectus and 7% by private placement. So difference in markets there. But having said that, with respect to the total numbers raised, it was 4.4 for venture, 57.7 for TSX. But on the private placement side of things, the venture we raised 3.4 billion, and on TSX it was 4.1 billion via private placement. So holding in fairly tight on the private placement side of things, and then on the prospectus side, pretty much dwarfed 52 billion to 1 billion. So I thought might be of note for you. In terms of the sectors that were really driving the bus this year so far, it's been lithium and marijuana, medical marijuana space. No, it's definitely the new green on the street, so lots of people trying to participate in that sector. Hopefully we'll see some new highs in the indices from that. Okay. The other sector that's starting to show some signs of life as well is the uranium space. It's starting to come back to life. There's been some good movements in that recently. Haven't seen a heck of a lot of corporate transactions in that space yet, but it's starting to get some bumps in the stock prices, so we might see some more interest in that sector as well. Okay, so that's sort of the market update. So I'll be going through some of the policies that we have there. And this one's a bit older, but in June of 2015, CSA changed their prospectus rules to allow for a prospectus to get filed with 2 years of financial statements. We haven't updated our disclosure form for RTOs or qualifying transactions or new listing transactions. So it still says you need 3 years of financial statements. So please, instead of preparing a third year of financials just for us, just pick up the phone, give us a call, and ask for a waiver of that third year. And we'll work with you with the new listing to ensure we can get an exemption on that basis. In terms of rights offerings, it's also been a change in that. So it was changed in December of 2015. So 2016 has seen a large increase in the number of rights offerings. Now, having said that, there was, I got the numbers, I'll come to that in a second, but let's see here. It's on this one here. There was 19 rights offerings this year. So in the 12 years before this year that I've been with the exchange, I think I'd seen about 3 to 4 rights offerings in aggregate. We've done 19 this year, raised $90 million. And the changes were largely as laid out on the slide there. We changed the lowest price you can go to is down to a penny instead of a nickel, reduced the record date from 7 days down to 5 days, and we're allowing fractional rights. The rights no longer need to be listed for trading. It's at the election of the issuer, and warrants need to have a minimum price of a nickel or the market price at the announcement of the rights offering. So what does all that mean? What have you seen? I've seen it at all ends of the spectrum. We've seen multiple standby guarantors for a rights offering. We've seen rights offerings with no guarantors. We've seen $20 million rights offerings. We've seen $500,000 rights offerings. One was announced for, I think it was probably about $60 million rights offering. It closed on $100,000 rights offering. So it is all over the map. We've seen the rights traded. We've seen them non-traded. We've seen them priced at a deep discount, which in theory incentivizes the existing shareholders to participate. And we've also seen them priced at modest discounts. And there's no magic formula at this point in time to what the success is. Realistically, again, it boils back to the management team executing on the business plan and how much take up they have on the shareholders following them. So switching gears, I guess the biggest policy change we had this year was with respect to change of business and reverse takeovers. We put out a new policy in December, so just basically a month ago now. It significantly reduces the number of circumstances you need shareholder approval for a transaction, and it also provides guidance on bridge loans and bridge financings and loans to target companies. So I'll go through those points. In terms of the shareholder approval exemptions, we were hearing a fair bit that it adds a lot of time and uncertainty to a deal for a transaction that is generally getting vended into an inactive shell company that the shareholders are starving for some sort of reactivation transaction. So it also added the cost of calling a meeting and or going through the paperwork surrounded with that. So it's adding cost, it's adding time and some uncertainty. So we basically updated the new policy. And so when considering a shareholder exemption, there's 3 key things to look at. We look at whether the transaction's arm's length. We look at whether the issuer is inactive, which basically it can mean inactive or close to inactive. So what's that? It could be an issuer on our NEX board, which is our board for inactive issuers. It could be an issuer that's currently on tier 1 or tier 2 of the venture exchange, and that is on notice to go to NEX. So it's pretty much, it's almost there. And then it could just be on tier 1 or tier 2, not on notice to NEX, but hasn't done anything for a year or two. It's just, you know, it's an old mining issuer that it's lost its property. It's looking at new options, and as long as it's an arm's length transaction, the company's in good standing, then we'll get an exemption of shareholder approval for a reactivation type transaction. New policy also affects what we look at in terms of bridge financings. Currently, or previously, it wasn't specified in there, so we've added that guidance in there just to have a published policy on it. And the 4 things we look at when a company's thinking about doing a bridge financing. So what is the bridge financing? Generally, you have a shell company, has a working capital issue, or only has, you know, $10,000, $20,000 in cash that it's just been scraping by on for a little while. Needs $100,000, $200,000, $300,000 in cash to go out, engage professionals to do due diligence on the transaction, execute professional reports, whatever needs to be, financial statements, etc. So we'll look at financial need in order to do a working capital type private placement to fund the costs of a transaction. It's not to make payments to the vendor, it's to literally cash up to get pen to paper to do the due diligence on a transaction and see whether it's a go, no go kind of financing. The closing of that transaction would be independent of the COB or RTO. So what you have out there is you say, hey, you have a shell company, we've announced a major new listing, In theory, you're going to finance that, raise $2-3 million, and we're going to price that financing at 25 cents, but we were halted at a penny or a nickel or something like that. And we're going to do a working capital private placement, could be at 25 cents, could be at 10 cents, wherever it is in there. And why those people coming in on that bridge financing would be able to get a price different than the concurrent financing would be that they are committing to that financing. And if that RTO doesn't complete, which some of them don't, they now have shares in that shell company that now has lost that deal. So they can get the benefit of the early price for a working capital private placement, but they're fully committed, it gets closed on, and then they can execute the transaction. There is more specific guidance in that in the policy, so if you're thinking about doing that, you do need to read the policy and make sure you're compliant with that, but that's the high level summary on that one. In terms of deposits and loans to target companies, and how am I doing on time?
You do okay.
Okay. There was basically there wasn't published guidance in our old policy for reverse takeovers and change of businesses. There was guidance published for a qualifying transaction, policy 2.4. So we basically have mirrored that requirement and tweaked it slightly. So again, if you sign a transaction to do a large acquisition and you need to make some sort of advance, first $25,000, you don't need any approval from the exchange. You can do that at the board's discretion. If you want to go above 25,000, then there are 5 factors that we look at. Is the loan or advance secured? Is the transaction an arm's length transaction? Has there been a comprehensive news release issued prior to advancing the funds? Is the due diligence with respect to the transaction well underway? So I had a request yesterday. They have $300,000 in treasury, no private placement to note, and they want to advance $250,000 for a deal that they just signed yesterday, and they don't actually know if they have title to the property or not. So those are kind of issues that we deal with on a day-to-day basis. It comes up more frequently than one would think, but these are the kind of items that when you're looking to do an advance that is a significant portion of treasury, you're going to be looking at these types of criteria. Now, having said that, we have approved some large advances. We had one issuer that had $25 million in cash. It was a nice problem for them to have. They went out looking for a big deal. They found one. It required an initial deposit of $5 million. So that was basically 20% of their working capital. And we said, yeah, okay, yes, it's a large deposit, but you guys are sophisticated players. You have the cash such that if that loan doesn't materialize to anything, that transaction doesn't happen, you're not impaired and orphaned and just gonna die out there. You got 20 million left, right? So those are types of things that we look at when loans are being done. Switching gears now, that was policy 5.2. Now we're talking about sponsorship. Mentioned this before, and we've been mentioning it fairly often to the street. Sponsorship is something we're looking to get rid of, and it adds a fair bit of cost to the transaction, not necessarily a lot of value added to that by the work done. Sometimes it depends where the transaction is. If you have a North American transaction in the tech space, industrial space, innovation space, that's definitely business we're looking to help build out and work with you guys to get across the line. If you have mining transactions around the world, there's title opinions for the property, there's a track record of management in that space, so those all go to help getting rid of sponsorship as well. Currently it's not eliminated, but it's looking at being partially, policy 2.2 covers sponsorship. That will be on track to be eliminated, and elements of that policy will be rolled into our new initial listing requirements. So if you take nothing else away from this, if you're putting together a new reactivation transaction, new listing transaction, change of business, if you would like to proceed without a sponsor, currently policy requires it, but please make an application for a waiver, come and see us, let's talk about the deal and see how we can get that waiver through and approved for you. Okay, in terms of initial listing requirements, that first bullet sort of is what I was mentioning. We're looking at changing initial listing requirements and folding in an element from the sponsorship policy in there. So in terms of looking at due diligence on a transaction, there'll be elements built in looking at various different things. It's not locked down yet, but is the business easy to understand? What sort of auditor or legal counsel due diligence summary do you have? Does the transaction meet initial listing requirements? Is there a concurrent financing? If so, how large is it? Above 2 million, above 4 million? Revenue, is it revenue target revenue generating company. Oops. Thank you. Is there some sort of university involvement or some third party involvement, bank or broker involved in terms of a line of credit, or some sort of large multinational involvement like a Coke or whatever? It doesn't have to be Coca-Cola, but some sort of third party customer that would lend validation to the business, if you will. So the CPC program, switching into that one, it's been our major source of new listings over the last 20 years plus. There's been 2,400 CPCs and growing, of which well over 2,100 have actually completed a qualifying transaction. Now some of those had eventually bounced down to next, taken 7 years to get their deal done, but actually reactivated off the next board. But they all count at the end. So it's, if you stick with it, then we can get those deals done. Having said that, lately with the changes in the market with respect to brokers ceasing operations and or consolidating, there's fewer out there to support a new listing of a CPC. So we're looking at trying to reinvent the CPC program, and it's in progress. Don't have any final answers at this point. Some of the things we're looking at is, some of the feedback we get is, when you put a CPC together, it's hard to get enough paper to make it incentivizing for principals to continue with a CPC, as opposed to finding a reverse takeover or shell target and restructuring that prior to vending in a transaction. So we're looking at increasing either the amount that founders invest to basically keep them tied to the CPC to make sure they get the deal over the goal line, potentially increasing the amount of discounted seed stock that founders can get, being more favorable in terms of stock options that are granted to founders to keep them incented there, potentially improving agent compensation to get them interested in the space again, and changing the deadline to complete a qualifying transaction, moving it out from 24 months up to 36 months, and basically, or increasing the size of the IPO to also, instead of having something raise 300,000, make it more like 500,000-600,000, so they have some cash to survive for a couple of years and actually do some due diligence on a couple of transactions. Anyway, any suggestions on that process? If you're interested, please follow up with me after the session or anytime. We're looking for input on that. We're getting close here. Personal information forms. We just put a new PIF out last month, and realistically, it was just a slight tweak for Privacy Act consent there. What's more important is the stage 1 part down below. We're making the PIFs fillable and savable electronically online, and then stage 2 would actually make it a smart form. So it would not only be savable, and when fields are being completed incorrectly or missing, it'll tag it for you or highlight it before you actually submit it in, because there's a fair bit of back and forth usually on PIFs, and right now that's one of the longest delays on a transaction, is getting the PIFs completed, get them in, lots of heads nodding, lots of yes, and you get that shit sorted. So thank you. Two to go. 4 character stock symbols. We have we came out with it in November. So you can get four character symbols now. I tried to reserve weed and gold and see if we could put an auction out for charity or something like that. But 2 lucky companies have reserved it, but they didn't have to do anything special for that. Anyway, 4 character symbols are out there and you can use them. The only glitch with that, if you have multiple types of securities, pref stock, warrants with 2 different types of warrants, so A's and B's, or prefs with A's and B's. Right now, for whatever reason, the trading engine only has 8 characters that it recognizes, and so if you have an abc.pr.a, that's 8 characters. So if you go to 4 symbols, you'll have the abcd.pr.a, that's 9. Can't actually have that work. So if you're going to have multiple types of securities that are listed, then you should stick with a 3 character symbol. That's all I'm going to point out there. There are moves afoot to improve that. Seems like it should be a pretty easy fix considering computers are involved, but apparently it takes more than that, so they are working in that. Lastly, I just want to talk about TSX Invest in it. Of all the people, we had a geologist at the exchange create this new app for us, and she has a bit of a tech background, Sally Gillies. If you've had the pleasure of working with her, this is her project, and she designed, built, and got it across the line. It's available to download at the App Store and on Google Play. And basically what it is it's an app that simply summarizes all the active financings on the venture and TSX, and it aggregates publicly available information about financing transactions, so you can sort by private placements, public offerings, flow-through financings, debt financings, and it's free to download. We're trying to get more retail investors back in the sector and help the public companies out there. So if you have a financing, you don't see it on the app, please let us know. We can punch it in there for you, just so we get hopefully more coverage for you. And it's just purely regurgitating the publicly available information that you guys post in the news releases. So with that, I'll turn it back to Grant.